This show is brought to you by MyPassiveIncome.life. Learn how to become a global project partner and earn passive income with no selling, recruiting clients, or after-hours work. Just go to MyPassiveIncome.life.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 7/9/20. Well, are things really getting better? Is the economy going to have a V recovery, or is it going to have a U recovery or a W recovery? I don't know, but maybe it'll have a B recovery. All I know is that numbers, statistics lie, and liars use statistics, as they used to tell me in college. I'd like to know your opinion. Is it getting better, or is it just a bunch of mope? Management of Perspective Economics. Email us, kl@kerrylutz.com, with your opinion. Our good friend Jim Welsh is back with us now. And Jim, what is your research telling you?
Well, thanks. It's always great to talk with you, Kerry. Appreciate it. Well, I think, there's a tendency for all of us to kind of look at the surface of data points. And if they improve, that means that things are improving and so forth. And I think there's a number of data points that have come out in the last few days that has been the reaction by the majority of investors. The employment report, better than expected. The last 2 months, it's 7 million jobs have been, if you will, restored after losing 20 million. But the thing that I looked at was the number of people who are still receiving unemployment benefits. And that is hard data coming from the states. And right now it's over 31 million. Whereas if you look at the Labor Department statistics, they're showing 17 million people unemployed. And the difference is that they ask a simple question. Have you looked for work in the last 30 days? And as we know, a lot of companies, when they laid their people off in March, they furloughed them or told them, it's going to be temporary. We're going to have you back. And so a lot of people, when they go to collect unemployment benefits, if you say, no, I have not looked for work in the last 30 days, you don't count as being unemployed in terms of the methodology by the Labor Department. So that difference between 17 million and 30 million or 31 million is the difference between about 11.2% unemployment rate and 19% unemployment rate. And there's been research done, and I've quoted this in my Macrotides letter, that historically, about 40% of the people who are quote unquote temporarily laid off wind up being permanently laid off. And so I think that's the key over the next 6 months. We are going to see more and more people transition from being temporary to permanent. And the irony is that the unemployment rate will go down much more slowly than expected. And there could be a month where it actually ticks up. So that's one of the data points. The other one was the ISM surveys, both manufacturing and non-manufacturing jumped over 50. And as I pointed out in my Monday report, those are dispersion indexes. So you ask 100 people, hey, are things getting worse? And, or I should say, are they getting better? And only 40 people say, yeah, they're getting better. But that doesn't quantify, well, how worse was it getting? Did you drop 10%? And then you ask the next month, hey, are things getting better? And 53% say, yeah, it's getting better. But things only improved by 3%. So my point is, people have a tendency to look at the surface of data points without understanding either the methodology or looking under the surface and really finding more critical information. And I think that's some of what's happening. And it leads me to believe that the recovery is going to be much more labored, and it's going to take time. And I think there's a risk of another wave of layoffs. It's not going to be compressed in 1 month like we saw in March, but slowly but surely, companies, if the economy does recover more slowly, are going to be pressured to cut costs where they can. And I think that's what's going to happen in coming months.
Hey, and if we look just today, Dunkin' Donuts said they're going to lay off. They're going to close several hundred stores. 450 stores. Brooks Brothers, the hallmark of American work fashion. No one's going to their office anymore. How is a men's clothing store going to work? I mean, I just am buying jeans now. Granted, I haven't gone to an office in a shirt and tie, suit and tie, or jacket and tie in, I don't want to tell you how long, but it's better than a decade.
Yeah.
It's almost 2 decades since I sold my company back in 1998. I've never done it again. I wear a jacket on occasion, slacks when I want to look nice, but no more ties because I feel like I'm getting ready for the hangman's noose with that damn tie around my neck. It's cutting off circulation, all sorts of bad
as we get
things.
older, we need as much circulation as we can get.
You got it. Yeah. So screw those masks.
You bring up 2 points. Yesterday, I think United Airlines said, hey, we're going to be laying off. I think number was more than 20,000. And the airline specifically took money, and as of October 1st, they took the promise, we won't lay anybody off until after September 30th. And we're talking many thousands. I think there's 700,000 people employed in the airline industry. And as a whole, you might lose over 100,000 of those jobs come October. So these are all examples of the impact of, companies trying to operate on revenue flows that are far less than what they were built to operate on. And that takes time.
You know what I call this, Jim? I call this Epstein economics. Because at the end of the day, you're still going to be dead. You're still going to have committed suicide. It just felt really good getting there.
Well, I'm not going to go near that one because we could get ourselves in trouble. The other thing I'll mention is Yelp came out with a survey last week, 140,000 businesses. So it's not obviously huge. There's 30 million small businesses in the country with about 90% of them.
That's a sizable sample, though.
It's a decent sample, and it was across a bunch of different, industries. But what they found is 41% of the companies that closed in March that are still closed do not plan to reopen. And for restaurants, it was 53%. And the other survey I've noted a couple of times, JP Morgan did a survey last year, 2019, when the economy was in a much better place. 1.5 million of their customers, 29% of them weren't making money. So to me, the conclusion here is they're throwing lifelines, and I'm glad they're doing it in terms of the PPP loans and so forth to try to buy time, to build a bridge until we get to a vaccine. But there's a lot of companies that were on the edge going into this. And I just think as time goes on between now and year end, we're going to see a lot of small businesses decide to throw in the towel. And that's why I do believe, as I said, I think there's going to be another wave of layoffs. It's just going to be spread over a period of months instead of just the 1 month that we saw in March.
Yeah, no doubt. I've wondered, I don't know that it's going to be as bad as Yelp is saying, but it certainly could be a third without even thinking about it. And it really depends upon your area. On the other hand, we've got QE to infinity. We've got the Fed buying junk bonds and corporate bonds, and imminently they'll be buying stocks as well. And we've got every government in the world doing the same thing. So you could very well have this bifurcation of the markets and the economy, where the economy continues to tank or maybe stabilizes at a lower level, but the stock market keeps going up because where are you going to put your money? And one thing you haven't talked about, I know you don't follow it all that much, is precious metals, which have been on a major bull market. As of recently, today, gold just broke $1,800 the ounce, and silver is getting close to, it broke its resistance point, but we'll see where it closes. It's at 1856 right now. Precious metals, kind of the canary in the coal mine here.
Yeah, potentially. And the one thing I'll note is, in a sense, the veil that is, in a sense, blocking investors' view of what may be really going on in the economy is exactly as you just addressed in terms of monetary policy, fiscal policy, and everyone is of the mind that, hey, no matter what happens, they're going to make it okay. And I just wonder, and to me, the question is, are we going to get to a point where the disappointment in economic activity and what it means for corporate earnings. Not so much 2020 because everyone's written off 2020, but the whole thing is, wow, next year we're going to have a really good recovery. And that's going to be the ultimate test. Does the economy recover sufficiently to keep those hopes alive, or do we hit a bump in the road? And that obviously could happen with a second wave. I do believe Congress is going to pass another bill to extend the unemployment benefits beyond July 31st. It won't be $600 a week. It'll be something far less. But I think they'll also come up with money for state and local governments. So we're going to see more lifelines, to help, again, extend this bridge between January of 2020 and when a vaccine shows up. And then it's just a question of, can they make it last long enough?
If a vaccine ever shows up, I'm of the opinion there will never be one. But we're seeing, though, on the other hand, guess what? Hydroxychloroquine combined with azithromycin and zinc would have saved 70% of the people that were never treated with it. We've got we've got good data, 2,000 cases from Henry Ford Health System in Michigan. And so the fact is the virus becoming less deadly, deaths are down. There's spike periodically. Deaths are way down from their peak. Today they were up a little bit, or yesterday I should say, they were up a little bit. But, the fact is the trend is down here. So it's just these governors that are standing in the way, in my estimation. And things like face masks are all well and good. If they got to hide behind face masks to reopen the economy, so be it. But if you're not going to reopen the economy, don't require people to wear face masks.
FSN Radio. It's all about what's next.
Nobody likes the guy who says, "I told you so." The guy in 1991 who said to you, "Invest in the internet. It's going to be huge." Or the guy in 1997 who said, "Come on, this is going to be big. They call it social media." And the guy in 2009 who said, "I'm telling you, man, crypto is real." Now, I'm not going to be that guy who says, "I told you so." But I am telling you that there is a 21-year-old international company where you can become a global project partner, earning a passive income doing exactly what you're doing at this moment. No selling, no recruiting clients, no administering a business after hours. Visit www.mypassiveincome.life now. That's mypassiveincome.life. Don't let history repeat itself on this one. Earn a passive income. Now listen again. That's mypassiveincome.life.
The Financial Survival Network. It's all about what's next.
Well, a couple points. Unfortunately, this has become a political football in an election year. And I do believe there's people that are trying to use that to their advantage. The one thing I will tell you about the death rate, which I believe is misleading, is that the positivity rate of tests since the first week of June to the end of June has gone up over 70%. So yes, they're doing more testing. And yes, that's why the case load is going up. But the fact that the positivity rate is going up that much shows that there is actual spread. And what has, I think, confused some people, they say, well, yeah, but look at the deaths are down from 2,000 to under 500. Hey, that's wonderful. But the problem is with that is understanding the dynamics of COVID. Anybody over 60, over 70 and 80, the death rate starts to be 20%. Mm-hmm. But if you're under 45, it's less than 1%. And so what we've seen is the economy's reopened, the infection has stopped hitting the people that are in nursing homes, which was the primary center in early March. Right. And now it's hitting the beaches and the bars. And the average age has gone from 65 to 35. So the death rate of those who are being infected is way
And that's a good thing. That's a good thing because we're getting herd immunity. The people getting it are the least likely to die from it. Yep. And again, shutting down the global economy for this is going to be shown to be a total foible. And look, the fact is they know by all accounts that the number of people who actually have confirmed cases are but a fraction of the people out there who've gotten it, who've gotten infected.
8 to 10 times, I believe.
Or more. It could be as high as 50 million. Nobody knows. Yeah. And they just know the way that influenza spreads, and they're able to make to extrapolate and come up with models and all that. And the models have all been wrong. And we know that the COVID death rate is overstated because they have a direct pecuniary interest in overstating the numbers. Hospitals, they get more money. And when they use ventilators, they get even more money. So the whole thing, the numbers are unreliable. And we've seen it undercover tapes where in the epicenter of the epicenter, Elmhurst Hospital in Queens, New York, place I know well. I know Queens, grew up in New York. And there, they were classifying patients as COVID-19 deaths, even though they tested negative twice for COVID. So in any event, this has become a political thing. It's no longer science. And because if it were science, then everyone would admit everyone should be on hydroxychloroquine and on steroids. But in any event, until we get a little sanity in the world, if we ever get any, which I'm a little skeptical of, we're in this situation. So 6 months down the road, the market going to be higher, lower, or flat?
Yeah. I think in the very short term, we're near a high. As we all know, the FAMANG stocks, the big cap stocks that represent about 24% of the S&P, there are like 5 or 6 stocks. They keep making higher highs because they're beneficiaries of what's taken place. At the same time, every other major average, Kerry, has failed to make a new high. And in some cases, like the Russell 2000 transportation average, they're way, way, way below their prior highs. So this bifurcation, I think, feels like it's starting to reach an extreme. Sentiment is measured by call-put ratios and so forth, short-term, indicate a lot of optimism. So I think there is the potential that we will see a correction in the market over the next week or two that could take the S&P down to 3,000 or touch below. So we're not talking about the end of the world. And I do believe Congress will, after they do their usual song and dance and posturing, will pass additional funding, as I said earlier. And I think that could be what drives the S&P up to a new all-time high. After that, I think there could be a much sizable correction because I do think there's the risk that the economy is going to fall well short of what people are expecting. And at some point in time, the rubber band breaks. But in the meantime, as long as the FAMANG stocks are as strong as they are, given their weight in the S&P, the NASDAQ 100, the market is going to really resist any kind of a deep correction.
Agreed. And hey, we'd be remiss if we didn't mention this. Warren Buffett, 43% of Berkshire Hathaway is invested in one stock. And that one stock is Apple. And now, thanks to its amazing run, Buffett now owns more than $91 billion worth of Apple. I mean, now he didn't start out having 43% of the holdings there. He started out having, maybe 20 something percent, but it's gone up so much. Maybe he's at 28 or 29%. Now it's 43. So is he going to stick with it or is he going to go? And his number 2 holding, interestingly enough, is Bank of America. So but nowhere near.
No, I think you bring up a great point because that would be illustrative of a lot of money managers who've been long Apple for a long time and Microsoft and all these other stocks. At some point in time, we can talk about, are they expensive and all the rest of it? Hey, the fundamentals of most of these companies are really strong. They're great and well-run companies. But the problem is price-wise, they've gotten very extended over things like their 200-day average. And in the real world, as you just pointed out, they've become a bigger and bigger portion of people's portfolios. And at some point in time, you do some pruning. And you take some of the money, as you just point out, Buffett must be sorely tempted to, let me take 10 billion or whatever it is out of Apple and buy some more Bank of America, because that stock has gone down quite a bit relative to, I'm sure, his cost basis. At least the banks in general have gone down a lot. So I think that is one of the risks for the market, is that there is a rotation where money gets taken off the table in the FAMANG stocks. And again, because of their weighting, that contributes to a correction. Whether or not we'll see a full rotation into economically sensitive stocks, That to me is the key, because that's how you avoid a deeper correction. But the only way that happens is if we really get evidence that the economy is truly turning the corner in a meaningful way. And as I said, I am skeptical.
You're skeptical.
At this point. And I think, a vaccine, the fastest vaccine on the planet has ever happened was 4 years in the 1960s for mumps.
I don't think it's ever going to be a vaccine, and I don't think it's necessarily required. I think we're going to get the herd immunity, but that's for the scientists to figure out. In any event, Jim, Macrotides, how do we subscribe?
Macrotides.com.
All right, macrotides.com. And everybody, we'd love to hear from you. What's your thoughts? Apple going to go even higher? Will Buffett wind up having 80% of his portfolio in Apple? What are your thoughts? Email us kl@kerrylutz.com, kl@kerrylutz.com, and Twitter feeds @KerryLutz. Anyway, Jim, we'll talk to you again soon. Thanks for coming on.
Always a pleasure, Kerry. Thanks very much. Stay healthy.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.